We have a program called Podium. It stands for pre-foreclosure, outdated, distressed, inherited, ugly, and move now. That's our agent program. Instead of listing it on the MLS and having to deal with all the stress and it's your most difficult listing, they can bring it to us and it's gone in a day. And a lot of the time, it's a better financial result for the seller as well, which is often surprising to real estate agents.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 442. Today, we're going to talk about some of the major trends that will affect real estate investing over the next decade. We all know there's a housing shortage in the U.S., but how does this offer local investors a special advantage? Demographics play an important role, with Gen Z leading a youth movement that has created a visible shift in the market. We'll be discussing these trends and more today with Kurt Carlton, the co-founder and president of New Western, the largest home buyer in the United States. Kurt, welcome to the show.
Thank you for having me.
Tell us a little bit about yourself and just a little bit about New Western. You'll have an opportunity later in the show to really plug it, but give our listeners a little bit about your background.
I've always been in real estate. Ever since I've taken anything seriously in life, it's been real estate. So it's in my DNA. I started out in the Caribbean. We were working on a resort project out there with the Kurt Carlton. Moved over to Texas, put an anchor down, experienced the Great Recession in a very meaningful way. And that's when we started New Western.
What did you do when you started New Western? What was the purpose of that business?
Well, we were just figuring that out at the time, right? And we were learning what the purpose was. It's not, I like to say we're the product of circumstance, not design. I wish I could say I was this smart Ivy League guy that had a big thesis on what to do. But the reality was, the whole world changed for us. We had a real estate playbook that was very different before 2008, and we just had to throw it in the trash, and we had to write a new one. And we had to figure it out as we went along. And it was scary and exciting, and it turned into what we have today.
Back then in 2008, there were certainly a lot of different trends and demographics, but it was all very unclear at the time. When you started your new business, what were you looking at to make you say, okay, this is the direction we should head?
Well, we knew there was opportunity. That was clear. I don't think we'll ever see a market as inefficient as it was in 2008, as long as we live. You had asset managers that overnight, they'd wake up in the morning, they'd have 16,000 assets across the United States they would have to do something with. You just couldn't get anybody on the phone. There were people coming into the space that saw opportunity, that wanted to buy houses, that wanted to turn them around for rentals or for whatever. And they couldn't find the right people very efficiently. And we had a lot of contacts. We quickly built some technology. We aggregated all of the foreclosure data. We ran very basic algorithms. We were doing a lot of the things that the real estate community wasn't equipped to do. They didn't know how to work with these small independent real estate investors very well, and certainly not with this type of asset and an involuntary sale, things like that. And we figured it out.
In the introduction, I mentioned that New Western was the largest home buyer in the United States, and that is as of 2023, last year. What happened in between the Great Recession, 2008, 2009 to 2023 to catapult you into that type of growth?
So I guess the other part of that story is, we knew we could buy houses. We knew we had figured out that part where others could not do it as efficiently in that market due to what we had built and the team that we had. But, we very quickly ran out of money. So in 2008, 2009, there's just, you're not knocking on doors and, getting VC funding for a startup. But what we saw were all these real estate investors were coming into the market. So that was really the beginning of our company as a marketplace, where if you look at, more modern day run at iBuying, where Zillow Homes or Zillow Offers, as it became to be known, they complained they didn't have the operational capacity in the field that they had to build out. Well, we never had that issue because we just passed the houses along to a solopreneur, local real estate investor, a small business that understood the market. They worked on the contracting, all those things. So on our marketplace today, which it's evolved into, the properties are only available for a flash, and then they're in the hands of a real estate investor. We want to get them in the hands of a real estate investor that can return that value add type of real estate to market. And, these are people that are operating in neighborhoods that they know and they understand. They have local contractors that they manage very closely. They've got great pricing control as a result of that. And they can do things that we just couldn't do from a top-down approach nationally. And that's why it works.
You mentioned the Zillow iBuying business, and that kind of went belly up. Can you talk a little bit about that and compare it to what your business does?
It's not a exact comparison. We never viewed them really as a competitor in any sense. If you're an iBuyer, you're looking at the $5 trillion real estate market, and you want to do it better, right? And you're trying to disrupt basically the realtors in the market. You're offering an alternative for a seller that's looking for more convenience. But generally, the property types that an iBuyer is looking for, they're not looking to do $150,000 remodels. They're not looking to take vacant, uninhabitable houses and make them habitable again. So it's a very different type of inventory that they're dealing with. There is some rehab. There's the need to have, a decentralized construction element around the United States, but it's not the same type of the value add inventory that we deal with on our marketplace.
So it sounds like your marketplace is maybe some more distressed type properties that you're picking up and then flipping, wholesaling to the solopreneur who's going to do the rehab on them?
The properties you would see on our marketplace would be a value add property. So there's some reason why an investor could purchase that property, add value, create value, and resell it for more. That's how they earn their money. So there's something with that property that a traditional homeowner, it's beyond their desire or capacity to deal with those repairs. Sometimes it's a complete tear down and they're going to build a townhome because the zoning in that area is favorable to that. Sometimes it's a very small land development deal, small multifamily, things of that nature.
Talking about trends. So back in 2008, actually going back 8 years when I first started this podcast, one of the major trends we talked about was millennials when they would start coming into the marketplace, buying homes. Now that was 8 years ago. Now we're talking about Generation Z. So I'm wondering if you can kind of take us through that period from 2008 to today and talk about like the demographics and the trends that have been changing over that period and where you see them heading.
I mean, we've been through a lot of waves and trends. We started in the Great Recession. We've gone through the Great Resignation. Now we're looking at the Great Renovation. Various generations are playing a part in that, but we've seen it change. We've seen it change a lot. You've got different walks of life. We still have a lot of what you would expect, which is corporate refugee. They cut their teeth in the corporate world and they transfer those same management skills to, from mid-level managers to contractors, right? And that works. And they look at that as a way to gain some autonomy. They leave their 9 to 5 and they get into something where they can be their own boss. And you've seen a lot of that lately. That segment is growing. And I think that's because of the opportunity. Flipping houses today is very different than what it was in 2006, different than what it was in 2012. It was still this very niche thing. And now it's a real proposition. You see a lot more of these corporate refugee types. They're looking at this as a real occupation, where they flip houses for income and every once in a while they keep one as a rental and they consider that their 401k, right? So then you have this new segment coming in, which is fast growing. And this is just about 7% of our investors. We've got about 200,000 investors on the platform today. About 7% of them are Gen Z, which is surprising to me. We survey every quarter all of our investors. But what's unique about this group is they just have so many more strategies to tap into than the traditional investor. And I think that's probably due to they have social media, YouTube, they just have information travels so much faster. They're much more inclined to use a lot of this technology that's moved its way, from the institutional world. Once the institutions went on pause, a lot of that technology is cascaded down into, those software companies are looking for a new customer base. So they're selling that software to traditional, or these solo investors as well. So they've really latched onto that. And these different strategies that they have to deploy, like if you look at a market like Seattle or LA, where, you're buying a house, a rental property, a 1,500 square foot rental property for $600,000-$700,000, like just cash flowing that as a straight rental is difficult, but they found ways to do the pad split. Obviously everybody's looking at the Airbnb. In LA particularly, we've got an investor, young guy, works for one of the big tech companies, but he uses some technology that he's built to identify lot configurations that are just the right size so he can put an ADU in the back. He can dramatically increase the return on those types of investments versus just renting it out. So they've just gone non-traditional. They've got so many more hands to play than a traditional investor. It's just really interesting to watch a lot of these Gen Z investors and what they can do with just different types of assets.
Do you have any other specific examples of what Gen Z is doing with either the tools or the technology that other generations may not be doing or even thinking about?
I think, today, the big thing that I think is so big, nobody really has been able to articulate it properly, I think is, Blackstone and everybody came into the space. And if you were in 2006, you would say a REIT would never be, single family homes in a REIT. It's unmanageable. Technology and advances in just the organization of an asset class, one of the biggest asset classes in the world, has shifted from private, entirely private, to public. There's publicly traded REITs that own SFR now. And it's shifted from local to national, right? So if you're based out of Dallas, like Invitation Homes, you own houses all over the nation. Where generally this has been a landlord's game where you own a house down the street, it's privately owned, it's not a publicly traded asset. The technology infrastructure for that machine that to build to support that is starting to cascade into these other, into independent real estate investors. And the pause for the institutional world, they're not buying these SFR. So that's really accelerated that shift. And you've got these young individuals that really understand technology. And now, if I work in New York City and I've got a very high paying job and I'm a young person, I can't afford to own an apartment in New York. But I can afford to own 3 rental properties in Columbus, Ohio. And that is happening quite a bit. We're seeing that all across, the nation, where we're typically used to. The trend has always been, an investor is on our platform. They're looking for assets that are 30 minutes down the road in neighborhoods they know and they understand. The Gen Z crowd, they're buying everywhere. They're researching the areas. They've got the right technology to manage this, whether it's a SaaS product and they're doing a lot of it themselves, or they're tapped into a national property management company. We're seeing a lot of that. Home ownership through rentals. They get the same benefits of growing equity, tax benefits and things like that, but they could never own a home in the city that they live in.
You use the term SaaS product. What's that?
Software as a solution. So, you can cobble together various SaaS products to manage a rental from afar without having to pay, full-time property management firm. As long as you've got time and ambition and all these things, and more people work from home, and, their 40-hour jobs just take them 20 hours these days. You've got more time, right? And often, like the Gen Z, the way they find us is, we went through the Great Resignation and everything, and everybody was into a side hustle for a long time. That's all you read about when you pulled open the news, right? The new side hustles everybody's doing. And that's how they discovered really New Western. And they pick up one rental, they pick up 2, and they say, I could probably do this. And, at some point they leave their full-time job and they become a real estate investor full-time. And that's usually how they discover us, is through some kind of side hustle where they're dabbling in it.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. I want to pick your brain on like the BlackRocks and the Zillows. And when they first came into the single family market and said, okay, we're going to buy up large pools and make money, being somewhat familiar with that market and understanding its different inefficiencies and dysfunctionalities, I thought, well, that's a disaster in the making. Do you have insight as to how those actually went? And, if they were successful, where were they unsuccessful? Just what's your overview of the larger institutions coming into the single family market?
When Blackstone came into our space, and our space is still incredibly fragmented and immature. The institutions own a very small portion of the SFR in the US. The majority, overwhelming majority, is small, independent, small business landlords and house flippers. But when Blackstone first came in, everybody said, oh, this isn't going to work. This is terrible. What are they doing? Look how much they're paying for these houses at auction. And I think it was they're still building it up, but it was a success, right? So, and I think a lot of those individuals that had those opinions, a year or 2 years later, they had left their business and they were taking jobs at Blackstone. And that was what was happening. Now, the iBuyers have entered the space later, and there's a lot left to be desired around timing. I think the real innovation in business happens in times like now, when you're facing incredible headwinds, just like they did for us in 2008, because you've got to make it work or you're dead, right? There's no second round of funding. And I think a lot of the timing around when these iBuyers came into the space, there was a big prop tech bubble, and it was really easy to fix the problem with your balance sheet. And I think that was the simple solution. And because there was just so much capital in the capital markets, and then the shift in the market with the interest rates doubling, in a very short period of time has affected, they've got a balance sheet with debt, right? So it's affected them in a critical way. So it's hard to compare how that would have worked in different market environment. They couldn't pick really a worse time to get started or a worse time to be encountering what's happening now. So a lot is left to be unknown. What I do know is there is a segment of a homeowner that is just fed up with the traditional market. We're seeing that. And there is a section, there's a market segment of individuals that value convenience and paying a fee and having their house gone. And there's something there. But I think there needs to be a lot of challenge in the market like we have today for that real innovation to come through for those companies. And I think they may get there.
What's the lay of the land right now? I know I think you said that Blackstone is on pause, and so who's stepping in to kind of fill that space?
Well, the Blackstones of the world and the Pretiums of the world, they have discovered, or they're continuing to discover the builders and build to rent. And, that takes longer. But once they get deeper and deeper in that space, that's much more scalable, much more predictable, much more manageable. So I think they're going to get heavier into that space. They're doing that now, but they've really on the infill where you've got value add SFR that needs to be rehabbed. That will always be a piece, but I think they've opened up an opportunity for an independent real estate investor to have the ambition to accumulate 100 houses and sell them upstream. So you have a lot of that, a lot of portfolio movement. In 2008, if we wanted to buy 100 houses from a bank, you'd get a discount. Today, if you have one house instead of 100, if you have 100 houses, they sell at a premium because of the time and effort to organize all that, put together, things like that, because you've got these larger buyers. So that's been a big shift. But if you're an independent real estate investor, you're going to be the one growing the portfolios that you'll sell upstream. And that'll become a bigger piece of what these institutions will do.
Can you talk about the kind of the inventory crisis that we have, the lack of housing that you hear about across the country, and how you see individual investors coming in to help solve that crisis?
The way you would think of a house flipper in 2012 is very different today. We had today's April 10th, what was it, 30 days ago, we had the State of the Union. Everything was affordable housing, everything. Part of that program was a tax benefit for flippers. If you can find vacant inventory, bring them back to market in an affordable price range and sell it to, a lower income purchaser to encourage home ownership, I think that should be rewarded. We need house flippers today. So a lot has changed. Really, it started because 25% of the homes we have today were built leading up to 2008. And then nothing, right? We built more homes in 1992 than we did last year. We just haven't been able to build homes. But families have been created. Family formation has outpaced home construction, and we'll continue to do that for probably a decade. So we're not getting out of this problem anytime soon. We're missing 5 million homes. People want, at some point when you have your third kid, you don't want them running around the hallways of your apartment anymore. You want a home, right? With a yard and a garage and all these things, which is why build to rent is so popular. But if you look at what's happening today, we're going to probably build, I don't know, less than a million homes this year. And you'll probably have 300,000 or 400,000 home flips most of which were previously vacant. There's 15 million vacant homes in the US, which is just insane. So this is when I was going back to the opportunity and why we're seeing so many more people come into the space. I mean, 2 years ago, we had 150,000 real estate investors on our platform. Now we have 200,000. It's just growing very fast. This proposition to become somebody that identifies vacant inventory, rehabs it, returns it to market, it's a real proposition today. These guys make good money. They do it well. And it'll be this proposition that you'll see becoming more and more common. Real estate, when it comes to real estate like what we do, where it's a value add property, it's very different than an iBuying model. These are houses that need a lot of work. There's something wrong with them. There's value that an investor's adding to the property. So it's a non-fungible asset, right? It's unique. It's highly localized. That is extremely challenging you can't perform that business from a national level. You're going to require these local real estate investors to manage the contractors very locally, to understand the neighborhood, how that all works. You can't do that with a spreadsheet in Wall Street. So this will be a small business oriented industry for a long time. And if you look at the numbers, the only way to really chip away at this affordability crisis is to provide more inventory. And if the builders can't deliver that, and the government can't directly fix this infrastructure issue we have with aging homes, well then, I think the investors can, at least to some degree. If we can find more of these vacant houses, we can repair them, we can return them. The houses that these real estate investors work with are about 40% more affordable than a new build. So by definition, they're affordable inventory. That's the only way you can really deliver affordable inventory today. We can hold our breaths. We can wait for these 3D printing companies and things like that to push blocks out of a machine that people are going to live in. But, or we could tap into this continuum of 15 million vacant homes. Some of the houses on our platform, they've been vacant for 20 years. And we identify it. We finally get it online. We get it in the hands of a real estate investor very quickly, and they're turned around, and it's a net +1 unit in that neighborhood, and it drives down the cost of housing.
Talk about New Western and your platform. I mean, what kind of investor would go and access anything on your platform? What are you offering? Yeah, I mean, I'm hearing distressed, value add type inventory. Is that what you're focused on primarily? Is it these 15 million vacant homes across the United States, or is it even more than that?
That's become the focus because that's the big opportunity. That's the big issue we have today, are the vacant, affordable homes. That's what everybody wants. So that's what we find. And we're good at it. The inventory is hard to find on our side as well. So that's really been the plague of all companies in our space right now, is not being able to find inventory. Luckily, we've been able to maintain our ability to do so, which is why we kind of pulled ahead to the number one home buyer last year. And we're continuing that as we continue to expand throughout the country.
The number one home buyer, a lot of that is vacant homes that you're buying. And then what, flipping, selling? Are you doing any of the rehab yourself through New Western?
We don't do anything that would be a conflict with the real estate investors on our platform. So they're the focus. They're our customers. So what they want is inventory. That's what everybody wants today. They want a project. They want the next opportunity for them to add value and take a reward at the end of the day. So we focus primarily on inventory, and we have to buy the asset. And that's because, we can't just act as a broker like maybe you would expect in our space. And that's because these types of assets, if you're a real estate investor and you come onto our platform, the first house you buy could have previously been a foreclosure. The second one could be a short sale. The third one could be a house that was inherited, and it was a hoarder that was there for a long time, and something like that. But for you, that transaction is exactly the same every time. Same contract, same process, the same title process. And that's what we do for the real estate investors, because they don't care. They can't spend their whole life trying to figure out how to do an heirship affidavit, right? Or work with these things, because they're not going to do 1,000 transactions, right? They're just doing one at a time. So with transactions that are this non-fungible, this unique, that's where we bring our talent and our ability to standardize and simplify everything for that real estate investor. So that's why we have to buy the asset, so that we can standardize it for the real estate investor, and we can control the experience for the real estate investor, so it's the same quality every time. And they don't have to get wrapped up in, whatever the hair on the transaction is. We do all that for them ahead of time. And that's why it works. That's why people enjoy it, for the seller and the buyer.
When you talk about the hair on a home that's been vacant for 10 years, it can be substantial. I mean, you're looking at property taxes that haven't been paid, utility liens, all kinds of issues. So are you saying that you have a team that goes in and cleans all this up?
You look at the title industry today, and I can't tell you how many times we catch things and we turn it down because they're going to pass it through, right? Leaving liens on there, ignoring them, things like that, Liz pendants, writing over it or around it. So those are all the things that are very important. That's why we started a title company, really, so that we could control the quality of the outcome. And that's all important. Those are all the things that you would expect that we would simplify, so that for the real estate investor, all they care is, okay, here's the house. I know how to fix it up. I know how to manage contractors. I know I know the area. I can get a sense of what this is going to resell for. I know it better than probably the appraisers that appraise these homes, right? That's their mindset. But they shouldn't have to learn some nuanced situation to avoid some lien that's going to show up on the property because they didn't, know how to check the box or something like that.
Have you figured out a way that with some of these houses, the liens can be more expensive than the house itself, or even what the value of the house can be? I'm sure you've seen that. Have you figured out a way to get around that?
A lot of local municipalities are working, and counties are working on that. Like you get a lot of that in some of the older cities, Chicago, Philadelphia, you don't have to pay your water bill ever, and they don't turn it off. So you can imagine there's multi-generational buildup of water liens, and it could exceed the cost of the home. So I think that was about, there is some value in some of the regulation that could, or some of the bills that could pass that could help us. That was kind of the point of this. One of the bills that was in the Build Back Better, and they were speaking about it Biden was talking about it on the State of the Union. And he's pushed out some information on it that you can read online. But there's some of these neighborhoods, it's got to be more profitable for real estate investors, or else they won't revitalize those neighborhoods. So they're trying to remove some of the tax burdens there to incentivize people to go in there. Because if the rehab exceeds the cost of buying the house or reselling the house, like those areas will just always continue to depreciate. But if you can get that moving, it doesn't take much. Like if you can get 4 rehabs in a neighborhood going and successfully resold, like it's a chain reaction. Every other investor starts to come in, the comps start to rise, you start to get a lift in that area. So you can really change entire neighborhoods. We've seen it happen, in the Great Recession. We completely facelift entire neighborhoods in parts of Texas and things like that. So we've seen it happen before, and I think you could just give them a little bit of a nudge in some of those areas. You can do that. Chicago's working on a lot of stuff that have to do with liens that are exceeding, with the land bank stuff they have there. Jersey's got a program like that. So I think more and more attention should be placed on those things, and I think it will naturally go there.
Tell our listeners how they can find out more about you, get a hold of you, and then feel free to plug New Western as well.
I mean, you can always look for me on LinkedIn. I'm always on there. And New Western is just newwestern.com. But it's a marketplace for real estate investors that want to find houses to rehab. So it's very simple. There's all value add houses there. Generally, it's local investors buying local houses. But it's just exactly as what I explain it there. So if you go online there, you can be on the phone with somebody that lives in your area, in the area that you want to buy houses, that's on boots on the ground there, that is an expert in that area within 20 or 30 minutes, and start the process going. It's a closed marketplace. It's not open to the public. You've got to go through a little bit of a process to get access to the properties. That's just how we qualify everybody and keep things very efficient. But that's pretty much all I have to say about that. There's financing available through the platform too. We've organized all of the local lenders that are high quality and reliable. It can be a little bit of a zoo to find this types of financing, the fix and flip financing, because that's a heavily fragmented market as well. So we've organized that into our system. So if you're looking at a property, you've got information about the property, but you also have the products of all the local lenders that are reliable and that you can compare right there on the spot. So that's really convenient too.
And if someone has a value add or a distressed property that they'd like to sell, can they do that through your platform as well?
Whenever we go to a new market and we have to build the local market, it's really hard to find all these assets, right? As you would imagine. But once we get to a certain size, most of the inventory comes to us from, it could be local wholesalers, or it could be a big increase right now is local real estate agents. This is not generally the inventory that they desire to list, or that is even best for the seller to list on the MLS. And we have a program called Podium. It stands for pre-foreclosure, outdated, distressed, inherited, ugly, and move now. So all the things that you would think of for an agent, but that's our agent program, where they just bring those, instead of listing it on the MLS and having to deal with all the stress and it's your most difficult listing, they can bring it to us and it's gone in a day. And sometimes, or a lot of the time, it's a better financial result for the seller as well, which is often surprising to real estate agents.
What's your favorite hack or app? What do you go to on your phone all the time?
I probably spend a lot more time on LinkedIn than I want to do. I'm not on any other social media, but that's probably where I spend my time.
Kurt, thanks for coming on the show today. Talking about kind of the generational trends with millennials and Generation Z. Really interesting to hear your perspective on Blackstone. I keep calling it BlackRock, but I know it's Blackstone. And the Zillow, the Zillow buyer program that they had. And then just what you're doing with New Western. With 15 million vacant homes, that does seem like a really good chunk of the affordable housing that we need in this country. So thank you for sharing what you're doing. And it's been a real pleasure talking with you.
My pleasure. You take care. Thanks for having me.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group. And you can find out more about me by going to higinvestor.com. That's HIG investor.com.